Welcome. This is the ATRAM webinar series. We are about to start in a few minutes.
Do you want to make your money work for you but find investment intimidating? Do you want to build towards a better future? With ATRAM Group's funds, you can invest according to your interests and values. Investing is now made easier and affordable. Step into your future self, invest to reach your goals and aspirations. Matching your risk appetite and investment horizon has never been this easy. Let us help you maximize your earning potential by writing the growth story of the Philippine economy and opening your doors to the international trends in the global markets. Let us prepare you for a better financial future. At ATRAM, we're making lives better through investing.
Welcome. This is the ATRAM webinar series. We are about to start in a few minutes.
Investing may feel intimidating, but once you learn a few basics, it's actually easy to understand. And understanding and using that knowledge to your advantage are some of the most important things you can do to achieve a financially secure future. Here are 5 things to consider when investing. Remember, SURE. S. Size. Know how much you are willing to invest, given that investing doesn't promise returns. Allocate money first for needs and paying off debt. H. Horizon. Before you start investing, you should determine how long you're willing to keep your money invested for a specific goal. Long-term investing, at least 5 years, is best as it allows you to ride out market volatility. The longer the time horizon, the more aggressive or riskier portfolio an investor can build. O. Objective. What are you investing for? For some, it's a short-term goal, like saving up for a car or maybe a vacation. If you need the money soon, you should invest in less volatile investments. On the other hand, your retirement or your child's college education allows you to invest in riskier investments compared to closer objectives. R. Risk tolerance. Not all people are the same when it comes to the risks they are willing and able to take. Do you prefer stable price movements without volatility? Can you stomach short-term paper losses in exchange for higher potential returns? It's best to know yourself. E. Experience. Experience is the best teacher. Actual investment experience keeps one level-headed in making decisions. Investing experience also broadens one's knowledge of different investment instruments. So, before you invest, make sure you keep these terms in mind.
Good afternoon, ladies and gentlemen, and welcome to our webinar, The AI Revolution, Navigating the Tech Landscape for Long-Term Growth. I'm your host and moderator, Stan, and from the Digital Channels team, and it's a pleasure to have you all here today. We have a very, very exciting and informative session planned for you, aimed at helping you navigate the ever-changing tech landscape. And in the next hour, we'll explore the uncharted territories of the tech landscape, understand the degree of artificial intelligence, and unravel the mysteries behind the long-term growth in the digital era. Our speakers today will share invaluable insights, guide us through the intricate web of technology and finance, and this webinar is not just about understanding the present, it's also about envisioning the future. So today, we'll learn about how to make strategic investments, navigate the complexities of the tech world, and ensure sustainable growth in the long run. So, fasten your seatbelts, guys, and get ready for a very eye-opening experience today. The AI revolution is not in the distant future. It is happening now, and together, we'll uncover its endless possibilities. But before we formally begin, we want to let you know that this webinar is being recorded and will be posted on all our social media platforms, so you can refer to it whenever you need to. Whether you're a beginner in the world of finance or a seasoned investor, we want you to stay up to date with the latest investment news and strategies, and we've got you covered. Our YouTube channel, ATRAM Studio, has a vast expansion of videos that covers everything you need to know about finance, investments, and even our past webinars, even ATRAM itself. So please make sure to subscribe to our YouTube channel and hit the notification bell to receive alerts on all your devices whenever we upload new videos. You can also find these on our website at atram.com.ph for more comprehensive information about finance, investments, and the funds we provide. So, all of these can also be found on our social media pages, so make sure to follow us by scanning the QR codes flashed on our screen. And don't forget, we want to keep this webinar as interactive as possible, so if you please don't forget to leave them in the Q&A tab below your screens. Guys, we also have a raffle ongoing today. So every question you send is a merchandise. Winners will be announced at the end of this webinar, so please stay until the end. All right. Is everyone excited today? We are thrilled to have two very distinguished speakers with us. First, we have Shuangwei Lao. Shuangwei is a senior sales manager of the intermediary sales team for Southeast Asia in Fidelity in 2019 and has accumulated over 9 years of experience working in the financial industry. Shuangwei has started a career in asset management and as an associate in Citibank before moving to UBS Wealth Management. She holds a Bachelor of Business Administration with first-class honors from the National University in Singapore. She is a CFA charter holder and has attained the CFA certificate in ESG investing. Also today with us, we have Miguel, Miggy Lopa, who will provide us with insights into the benefits and features of ATRAM's Global Technology Feeder Fund. Miggy is a seasoned finance expert with specialized knowledge in investment management. He previously worked as a multi-asset analyst and assistant portfolio manager in ATRAM. Currently, he serves as an investment specialist, contributing to the growth of assets under management by offering investment guidance and in-depth product insights through client channels. Now, without further ado, let's embark on our journey through the AI revolution and the tech landscape. All right, Shuangwei, the floor is yours.
Thank you, everyone, and a very good afternoon. My name is Shuangwei from Fidelity International. I'm based in Singapore, but I'm very pleased to be able to meet with all of you over the Zoom event this afternoon. We're talking about technology today, probably a topic that is somewhat familiar to many of you, but hopefully through the session today, we could also uncover some perspectives that you might not have thought about previously. So if I could move on to the next slide to give you an introduction of who we are at Fidelity. Here at Fidelity, what's pretty unique is we are actually a privately owned company. What that means is we don't have shares which you could go out into the market to buy a Fidelity stock, for example. But the implication to you as an investor with us is that we are able to take a long-term view for a lot of the things that we're doing because we're not pressured to make short-term decisions just to meet quarterly shareholder reporting, for example. And that's really important when it comes to investing because investing is truly a long-term journey. Investing is also our only business, so I'm also very proud to share that we have one of the largest team of research professionals in the industry, and that actually counts for over 400 professionals and research staff who are based globally to provide you with the local insights. We currently manage about over 700 billion US dollars of assets, and that really cuts across various asset classes from equities, fixed income, real estate, private assets. On the next slide, what you would see is our accolades, and these are actually industry-given accolades in recognition of our strategies, in recognition of us as a service provider, investment house, and we're very proud to share some of these awards that we have earned, such as Fund House of the Year, House of the Year, over the past 1 year itself, and that's really quite a few awards that you would see on the screen. So now moving on to give you some insights to observations within the tech sector. You would see on the next slide, over time, technology, why that has been particularly exciting for many investors is that it is an area which you typically think of for growth opportunities. Looking across the slide, you will see that tech over time tends to be trending upwards. And in 2020, Two, that was the first time since 2006 where tech sector actually underperformed the broader global equities. That was quite a rare period, but you will also see that subsequently there was a very strong rally that came back into the market. On the next slide, you're probably pretty familiar with this already, which is that the rally that we have seen in the tech sector was actually very narrow. Some terms you would have heard the Super Sevens, for example, or the Magnificent Seven, which refers to that seven tech companies that basically drove most part of the rally. Outside of that, actually, the market has been fairly muted. So that actually represents a lot more opportunities out there from a valuation perspective. Take a look at the next slide. Let's talk a little bit about AI. No doubt, the hype led by generative AI this year has been a very significant driver of returns. So since the middle of the year, we have started to see these perceived winners of AI doing very well. The likes of, for example, your Nvidia or certain semiconductor stocks or certain software stocks. On the other hand, other companies that are perceived to be at the risk, like your music producers or companies that are in the business of customer services, they have actually sold off quite a fair bit. At the moment, expectations on both ends appear to have been overdone. And what we mean by that is, for those perceived winners, we do think that the market is viewing the outcomes to be too optimistic. And conversely, for those perceived losers, we do think markets are perceiving the outcomes to be too pessimistic. But what this represents is that there is actually a lot of opportunities now for active stock picking going forward. And this is something that we'll elaborate a little bit more in the next minute. So looking at the next slide, while it seems like the rally in tech stock this year has driven valuations quite a fair bit, it still remains quite a distance away from the highs that we saw at the end of 2020. So there is still quite a little bit more of a runway to go. And if we were to dig a little deeper, just like what I mentioned, a lot of this rally has largely been driven by that same handful of mega cap stocks. Looking at the next slide, I'm going to share a few areas where we feel and see some shorter term cyclical opportunities, starting with digital music, probably an area that you are familiar with. This ongoing changes has actually opened up opportunities for us to get exposure to some of these cyclical and structural trends. So digital music, one example, stocks within this subsector actually sold off very sharply given the global AI trade. Investors were generally concerned that with the rise of AI, that could disrupt the music industries, where AI created music could get around music labels or even create deepfakes of artists' music and skipping the music labels. For us, we do find that this threat has been overstated because music labels still remain key in building a musician's brand recognition and offering creative guidance. A lot of artists are also already working on getting these AI fakes of their content taken down and against the use of copyrighted materials to train AI models. So over the long term, music still remains fairly under-monetized. The rise of digital platform gives music a lot more opportunities to be further digitalized and more widely distributed, providing even more scalability. Hence, for us, when we take a look at this particular subsector, the sell-off was in fact a window of opportunity for us to take a closer look to even build positions within this sector itself. Moving on to the next slide, this is another area where we see the bottoming giving us an opportunity to play a cyclical rebound, and that's in the smartphone subsector. The smartphone value chain is another contrarian idea that has opened up recently due to cyclical issues. If you recall, back in the COVID period, there was a very large increase in inventory for smartphones as people were ordering ahead of expected demand because of fears of supply chain disruption. This supply glut has since largely normalized, and based on historical trends, we may start to see the start of a handset replacement cycle begin, especially in the lower end handsets. This provides a cyclical opportunity as markets hasn't fully priced in this opportunity. So over the long term, we also see a long runway for 5G smartphone penetration in your emerging markets, where 5G rollouts remain fairly low compared to developed markets and US. And this is likely to continue to accelerate. So that is one structural trend that we see. On to the next slide, it's gaming. Gaming is also another area with a cyclical and structural opportunity. Gaming tends to exhibit defensive characteristics in economic down cycles as consumers shift from nights out to nights in, as gaming is considered a relatively cheap form of entertainment, where people, if they're looking to reduce discretionary spending, they may instead choose to spend time at home playing games. Gaming as a subsector was hit by short-term cyclical issues. During COVID, it was also victim to some of these supply chain issues, where supplies of consoles, such as those related to your Nintendo Switch, Xbox, they were impacted. And as a result of the shortfall in supply, many developers have actually strategically withheld new game releases back in 2022. Good news is what we have seen is this console supply constraint has already eased and is accelerating the production of next generation consoles. Beyond that, new high profile titles are also expected to be released, driving long term adoption. So far, what you have heard me talk about sounds like the more exciting part of technology. And when we think of tech, we often also always think of tech as areas related to new growth, new inventions. But I also wanted to show you how tech continues to remain relevant and is in fact seeing increased adoption in the more traditional sectors as well. So looking at the next slide, one example I want to share is on farming or farm management. By analyzing data from various sources, AI can help farmers to make data-driven decisions, to optimize their resource usage, and to reduce environmental impact. It is estimated that AI integration in agriculture could actually bring down a 60% decrease in pesticide usage and a 50% reduction in water usage. These are all beneficial in various ways, be it from a cost perspective or even from a health perspective for the consumers of these farming products. And we're expecting that AI in agriculture is expected to grow multifold over time. This is just one example, but a relatable one to showcase the wide-ranging importance of technology. Looking at the next slide, this is one of the key slides that I hope will stay on your mind after today's webinar, because illustratively, it actually illustrates that technology is a lot more diversified than many people tend to associate with it. So we tend to think of technology as very homogeneous, probably what's related to internet, AI, the most obvious things that is driving the tech sector. But that's really often only the tip of the iceberg, because as you can tell, there's so many parts of technology and the way businesses and consumers like you and I are adopting and utilizing technology that often are less appreciated by the market, but that's where it presents the most opportunities for investors. The next slide, I wanted to give 3 examples of different types of companies that are using technology in very different ways. So let's take a look at the first one. This is actually a technology leader in the energy sector. You're probably thinking, in technology, how would we utilize, in energy sector, how would we utilize technology? So one of the very big movement in the whole world today globally is the talks around energy transition. For the different nations, companies to actually have a meaningful impact on energy transition, technology is actually extremely critical in bringing costs down in order for these energy solutions to achieve widespread scalability. In the second example you see, this is a manufacturer of power systems for aviation and other industries. So the manufacturer utilized technology in more obvious ways that you would think about, such as automation, engine maintenance, where they use data gathered from their planes during flights, and they analyze using high-end analytics to determine when they need to do maintenance for their engine. But on top of that, they also utilize and rely on big data and AI to improve their overall customer satisfaction, to reduce cost, and to increase customer loyalty. The third example that you see is a leader in ride-hailing and food delivery, classified as not specifically a tech company, but as you are probably familiar with many of these ride-hailing and food delivery, of course, technology plays a very large role in helping to manage the delivery to be more efficient, to help them with cost control measures as well. And this is one part of the subsector which is benefiting from the resumption of opening. And over the long term, it will also ride on the structural growth of the rise in experiences, as people are already very familiar and reliant on such ways of living today, where you often will rely on getting your food, your groceries, your parcels, and everything delivered to you without you even have to step out of your home. I've come to the end of my presentation, whereby you would see in this presentation what we have sought to do is to showcase how diversified the tech sector is, how yes, AI is one part that has done extremely well. Operations. But beyond that, there's still a lot of other opportunities that actually has arisen due to AI because they were on the other spectrum, which is that they were perceived as losers of AI, but they actually are backed by very strong structural demand and structural trends ahead of them, which we should also pay a close attention to. Of course, it's never easy picking the biggest winner out there, which is why active stock picking becomes very important. And that's why we have professionals doing it for us. Thank you very much. I'm happy to take on your Q&A later on.
Thank you so much, Shuangwei, for those enlightening insights regarding the tech landscape, both in the exciting new landscapes that you've discussed and also the more traditional ones in the sector. And as you mentioned earlier, truly, we see that tech is everywhere. As you mentioned, it's extremely diversified. And now I think a lot of the audience is asking, how can we take advantage of this? And it's great. It's a great segue to our next speaker. We want to shift our focus to the benefits and features of ATRAM's Global Tech Fund. And our next speaker, Miguel, Miggy Lopa, will provide us with extremely valuable information about this fund, the investment strategy, historical performance data, and how this fund aligns with the ever-changing tech industry. All right, Miggy, over to you.
Okay, thanks, Dan, and thank you, Shuangwei, for the very comprehensive outlook. So what exactly is this Global Tech Feeder Fund that we're showing today? So this is essentially a fund, no, that pools the capital of various investors and invests it into a target fund, which is the Fidelity Global Technology Fund. So the fund invests around 70%, or more typically around 75% of its capital into companies that specialize in developing products or processes or services that provide a form of technological advancement or improvements. So this begs the question, so what about the other 20 or 25% of the fund? This is not so known, but surprisingly, not all companies that you would think would belong to the technology sector are classified as tech companies. You have companies such as, let's say, Google or Meta, formerly known as Facebook, with their sector classification actually being communication services. So now more about the fund itself. So what it really seeks to achieve is, of course, the long-term growth of the money that you put in. And to touch on its style, what the fund manager really tries to do is they try to prioritize investing in not just the next big thing or the companies that we all come to know and we all see, let's say, on TV, or the ones we know the most, like Facebook, Amazon, Netflix, or Google, but they also try to capture the growth that we're seeing in the companies that actually enable the innovation that these big companies do. So what does that really mean? No? We have here, that first square, which is investing in part of the value chain. So I guess one good example would be, let's say you have a company like Apple, right? And obviously smartphones have been very, very popular, but it's not just Apple who benefits. It's also Corning, who makes the Gorilla Glass used for the screens of the iPhone. It's also TSMC, a Taiwanese company who manufactures the chips inside the phones. It's also ASML, a Dutch company who manufactures the machines that are used to manufacture the chips. So the point is the fund tries to dig a bit deeper and invests in companies that benefit from technological advancements and adoption, goes beyond the usual names and tries to dig a bit deeper, seeing the other companies that benefit but are not usually mentioned, or companies that we don't usually know about. So now if we move on to the next slide. So we talked about the process a bit. So now let's look at some of the characteristics that really makes this fund shine, in our opinion. And I think this overview is very apt since, as you can see, it spells out tech. So first, for the track record. So this fund has almost 24 years of history, launching in 1999, and has continuously outperformed its peers scoring in the high end of its top quartile, no, since inception. And as Ronway mentioned, this track record that's really allowed the fund to amass like assets under management at around 700 billion. So very has a very proven track record. And again, the investment team, which Ronway also has already talked about, but I want to highlight a bit more as the portfolio manager, Yun Ho Son, based in London, who's been the head portfolio manager since 2013. And it's nice to know also that the person responsible for that 10 years of outperformance is still the same person managing the fund today. And now, for the third point here, is something we discussed in the previous slide. So instead of just shoving all the money that they get from investors into the usual name, they again look for companies a bit more in the value chain to find other players that innovate and enable the technological transformations. And finally, for the fourth point, we have a holistic exposure. And I think this is something that Shuangwei explained very well, that the fund doesn't limit itself to the hot new tech names or the ones that we know most about, but they also invest in sort of old tech names and more cyclical names as well. So a case in point, one of the holdings of the fund, I believe, is Texas Instruments. Maybe you might know them, mostly because of the calculators, but they're actually also heavily involved in designing the chips used for smart refrigerators, smart air cons, lighting, thermostats. So even though it is sort of old tech and it's an old company established in the 1930s, the way they're using their technology and innovating is something that can be very lauded and is something that should be researched, and maybe there are opportunities to make a profit on investing in that name. And finally, of course, the fund is also diversified across different regions and thematic opportunities. So not just, let's say, generative AI, but you also have e-commerce, cloud services. And the key difference here is most tech funds usually have a very heavy bias in North America, usually mostly US companies. However, we think that this really fails to capture the innovation that we're seeing in companies like South Korea, Japan, uh, Singapore, Indonesia. So we think that the fact that this fund goes beyond just the US and North America is quite a significant strength of the fund. And now for the next slide, please. Now, if you can click there, one more. There we go. So I think we talked about the first 2 points a lot in the previous slides. I don't want to talk too much about that. But what I really want to talk about is the third point. I think the common misconception or the common thinking for tech funds, it's that it's very volatile, at least say versus stocks that belong in more traditional or defensive sectors. So let's say like in utilities, for in the local context, companies like Meralco or Manila Water, or retailers like Pure Gold and SNR. This is because while utility companies or consumer staple companies have strong and predictable profits, their profits don't really vary a lot from year to year. Tech companies usually start out with very strong revenue growth or top line growth. However, majority of their profits and their earnings really comes later on in the life cycle of the company, and this usually comes when they achieve a bit more scale and their products and services really start spreading out or proliferating in their respective markets. And so, in short, there's more room for error, as if, say, these stocks have a bad quarter, the bet that investors are making on their future growth, one slip up can change the odds negatively, and this usually results in a sell down or some volatility for the stock. So now, how does the fund try to avoid this excessive price movements or volatility? So the fact is, the fund goes out of its way, as mentioned earlier, to find companies that are overlooked or have, in essence, less bets on them. So what this allows is for more upside, because the stock price hasn't ran up excessively yet because of all the bets being made on it. And it also protects your downside or the risk that you're taking with regards to the potential of it going lower, as if we see market weakness and the stock drops, there comes a point when since it's already cheap, there comes a point that the stock becomes too cheap to ignore, and since there's also a lack of people selling the stock, the potential price drop is also very much minimized. So that's definitely one thing that we also very much like about the fund. Now moving on to the next slide. So again, now talking about their portfolio composition, we also talked about how diversified the fund is. And actually for the fund, the biggest holding is around just 5%, which is Microsoft. And with around 100 stocks in the fund's portfolio, let's say an idiosyncratic event happens. And it's finance jargon really for, let's say, an isolated event affecting one stock, let's say Microsoft. Let's say Microsoft reports bad earnings for some reason, everyone stops buying Microsoft PowerPoint or Outlook, and then the stock drops 10%. It missed expectations. Usually, in a fund that very much overweight to say just US companies or just the more popular names, this would mean a pretty bad quarter or a pretty bad year for the fund. But this fund has 100 names. So let's say if one company outperforms, even if it's say their biggest holding, which is Microsoft at 5.3%, this is just one out of 100. And the performance of all the other stocks can help buoy the overall fund performance. So this also protects your downside risk when investing in this fund. And I think one thing I'd like to mention also is how, again, we keep talking about how the fund doesn't usually just invest in the normal tech companies. You know, one logo you might see there is Rolls-Royce, which you may know them mostly due to their cars, but this is actually a company that they spun off in the 1970s. But they're mainly involved in the aerospace industry. And one of the things that they're working on is a sort of mini version. It's essentially a micro nuclear reactor, and they want a contract to develop and manufacture that for certain civilian projects. And companies that you might not know are really innovating are innovating, and this is what the company tries to find. Now moving on to the next slide, please. Now for the regional exposure, as you can see here, the green bar is the fund itself. The black bar represents the benchmark of the fund, and the light gray bar represents the peer. It's the average weighting of its peer group. So you can see here, when it comes to North America, the fund underweights North America relative to other geographic areas. So if you look a bit more closely, other areas it has a bias for include the UK, developing Europe, Japan, you have developed and emerging Asia as well. And this captures companies such as Rakuten in Japan, which is the Japanese Amazon. You have Coupang in South Korea. You have, again, as mentioned, Rolls-Royce in the UK. So it really tries to capture the growth that is happening not just in North America, but also in other geographic regions. Now for the next slide, please. And I think this is one thing we'd also like to highlight. We've mentioned that the fund usually outperforms when the market is a bit more turbulent or if there's a particular crisis. And I think, the proof is really in the pudding. And this shows the drawdown of the fund or periods where essentially the fund experiences some losses over the past 5 years. So now if we look at the leftmost side of the chart in early 2019, it really outperformed not just its benchmark, which is the black line, but also its peer funds, which is represented by the gray line. And I think nothing shows this as much as if we look at the slide the rightmost part of the chart, starting from September 2022, its average peer fund that also invests in technology dropped by around 40% when the Fed kept hiking rates and it was negatively affecting market sentiment. In comparison, the fund dropped 25%. Now, while 25% is still a very large number, this is a difference of around 15%. And if we look at the resulting months after, the fund also recovered much faster than its peers. Now, taking a look at the performance of the fund, if you can move on to the next slide. Now you might say, right, 25%, that's still a lot. I might not be able, how can I justify taking on that much risk if there's an opportunity for the fund to drop, let's say 25%? But again, looking back 5 years, the fund has returned close to 110% or close to double your money. If we annualize that, each year for the past 5 years, the fund would have returned you around 16%, um, which really outperforms the more traditional investing instruments like such as passively investing in the S&P 500 or the local stock index, which has really been trading sideways or flat since 2018. So this is also one reason why we like the fund so much. And now moving on to the next slide. Now, this fund is invested in some of the most clear and evident secular trends that we're not just witnessing, but we're actually living through and experiencing in our day-to-day lives, such as e-commerce, cloud networks, infrastructure, digitalization, 5G. So these are strong trends that are extremely unlikely to weaken moving forward. And in fact, it's much more likely that these secular trends gain pace as as we move forward and as time passes. So in short, what we want to highlight, and I think what Shuangwei was also mentioning earlier, is that there's so much more growth to be achieved by companies that belong in these buckets and develop products and services that belong to these secular themes. And this fund that we're showing you, the Global Tech Feeder Fund, gives you that avenue to gain exposure to all of these secular trends that will only grow as time passes. And as mentioned with the previous slides, this is a fund that not only gives you strong returns and beats its peer funds, but also minimizes your downside risk when it comes to the usual worries when it comes to tech investing. And this is why we want to show this fund to you guys, and this is why I want to share it to you, since we want you to be able to get that exposure into these high growth secular trends. And that's actually it for me, my last slide. So happy to answer any questions you guys might have.
Excellent stuff. Thank you so much, Miggy, for shedding light on the ATRAM Global Tech Fund. And this is a fund, I think, as you mentioned, both making tech more accessible to our audience, but also being more comparably downside protected, diversified, and is a fund that helps our audience and members buy into the tech innovation happening worldwide. And as you mentioned, I'm sure our dear audience has a lot of burning questions right after our speakers talk for this afternoon. But before that, we're very pleased to announce that ATRAM has clinched several awards this 2023. We were hailed as the best investment solution provider by the International Business Magazine Awards and the World Business Outlook Awards this year. And we received also the most innovative fund management firm, most innovative fund offering company and asset management company of the year. Also the highly commended from the Asset AAA Sustainable Investing Awards for 2023 from the Institutional Investor, ETF, and Asset Servicing Providers. Also, just recently, we won several awards for the Best Asset Manager from Citywire, ASEAN Awards for 2022 and 2023, and the Best Fund Management Company from the annual Global Economics Awards. And just want to reiterate, these recognitions serve as a testament to our unwavering commitment to creating cutting-edge investment solutions, such as the ATRAM Global Technology Feeder Fund and our other products as well. And these are as a result of our team's expert, steadfast pursuit of excellence and innovation in asset and fund management. We want to reiterate, we appreciate your continuing confidence in us and your support from our clients and our partners and everyone watching here today. All right, now we open the floor for our Q&A session, everybody. Please feel free to answer Q&A. Now, we have a lot of questions lined up in the audience, so feel free to add more and we'll try to address them today. And Miggy, Shuangwei, you guys ready? We'll kick it off with some questions already here today. First one that's listed here is for Shuangwei. One question coming in from the audience. When it comes to the tech giants and emerging players in the global market, which companies are currently standing out, and what factors contribute to their success?
Thanks a lot for the questions. Rather than talking about specific companies, we're gonna highlight a few areas which our portfolio manager sees as areas which are standing out in terms of subsectors within the broader tech space. So while he still likes some of the long-term internet winners, given that they have ongoing expansion, margin gain potentials in their core markets, and also the fact that they have optionality around new ventures such as AI, there are a few other areas which has also gained his attention. This includes market share gainers in newly consolidated industries like food delivery, certain subsectors with more stable demand profiles, like certain video gaming names, as well as software stocks with take-up potentials are further areas that he likes at the moment. Industrial software also remains another area of structural growth. There also remains areas where he sees idiosyncratic opportunities and areas which have made good operational progress, especially in the network segment. There are also certain areas that I would like to highlight, which from our perspective continues to be areas which our portfolio manager will avoid. Conversely, are areas that are trading at very high multiples. So these are typically right now in areas such as your software and IT services, as well as businesses that are further out in the late cycle or already near a peak.
All right, Shuangwei, thank you so much for highlighting the specific sectors in the field that the fund manager believes are currently standing out. The next question lined up is for Miggy. Miggy, in your opinion, what are the major advantages of investing in a tech-focused fund like ATRAM's Global Tech Fund, as opposed to the more traditional investment options? This one's coming in from the audience as well. Thank you.
So thanks, Stan. I think it's really important that we tackle this more now, especially with the track record tech has had over the past few decades. When you look at, let's say, the tech bubble of the 2000s and more recently in 2022, and going into this year when the Fed started raising rates. So what sets tech-focused investing apart, I believe, versus, let's say, more traditional forms of investing is how much the business models of many tech companies has evolved over the years to become way more robust and reliable, especially when it comes to creating value and the opportunities for growth. Back then, you had tech companies that had valuations that were not, nowhere close to being justified by the underlying fundamentals. Whereas today, you have companies who have very strong cash flows and are underpinned by very sticky business models. And I think a great example of that would be Spotify, who we all know of and use in our day-to-day lives. They have a strong subscription model that makes it easier to value the business. The same goes for companies like, let's say, Netflix. So with the Global Tech Fund, we believe like the fund manager really goes above and beyond to finding these kinds of businesses that really where we see the valuation being very justified in an environment where people are worried about the risks of elevated interest rates. And just going back to the question, I think one major advantage also is that if we look back past 10 years, especially since the great financial crisis in 08, 09, tech is the one that has consistently outperformed any other sector. It has the highest earnings growth. And we believe that with the secular trends that we're seeing in e-commerce, as Shuangwei mentioned, generative AI, these same tech companies will likely drive majority of the earnings growth again moving forward into the future.
Thanks, Miggy. Great reply, and have to agree, definitely. It's prime opportunity. We see these secular trends also growing also in the next 4 years and a few years. And as Shuangwei and you mentioned also, these themes are also looking good. For the third question, this one's directed to Shuangwei. How do we see the current tech landscape evolving over the next 5 years, and any key trends that we anticipate?
Yeah, so there are a few areas that we do feel have a view on looking slightly forward. So the portfolio manager right now is cautious about the overall outlook given the prevailing economic uncertainty that we're in. If this continue to persist for a while, what we do expect is that for tech companies, they will probably continue to be increasingly cautious of protecting their margins as well as restructure their business segments to protect the margin by cutting costs where they can and improving efficiencies. And today, even with the use of AI, that can be a very helpful tool when it comes to improving efficiencies and restructuring your business. This is actually something we see positively though, because such efforts are expected to help them ensure a more stable operating environment. Another observation or trend that we do anticipate is that tech is not expected to go away. So what that means is technology is expected to still remain essential for consumers' lives and corporate. From a structural point of view, digitization will continue to drive businesses and the way we operate as individuals, which will bring me to the third point of what we see looking ahead, which is the ability of these tech companies to remain profitable. I think sometimes when people see a tech rally, what tends to come to mind is the tech bubble that we have observed before. But if we were to take a look at the environment we are in today versus what happened in the previous tech bubble, clearly there are quite a fair bit of differences. We do expect that companies today and moving forward will still be able to generate revenue and profit. Business models today are overall a lot more robust than in the past. Firms are getting a lot better at monetizing their customer engagement. Many of them are benefiting from recurring, sticky subscription-based revenue. More importantly, in contrast back to the early 2000s, we are seeing a much more stable demand environment today where a lot of what's propelling technology stocks is actually backed by actual demand. It's not a euphoria or a hope that some of these companies can make it back one day. And we are actually seeing very tangible demand from consumers as well as tangible results that have been produced by many of these companies. So if to summarize, looking ahead in terms of the key observations that we see within the tech landscape, probably some level of cost cutting and restructuring, but we do see that they will continue to be very relevant and able to protect their profitability.
Thanks, Shuangwei. I think that's extremely reassuring for our investors, the people in the fund as well, realizing that there's real demand for these types of things. It's not all hype as well. And all right, we'll be moving on to the next question. Thanks everyone for sending in the questions. Very engaged. We have a lot of questions coming in. So Miggy, Shuangwei, thanks for addressing all of these. The next one is for Miggy. How does the fund balance between risk and return in the tech sector? And what steps does ATRAM take to manage risk for its investors?
So I think, this is one reason why we really advocate this global tech fund. I think, and if I can say so, it's because of the manager's shrewd ability when it comes to actively managing risk. For example, when global stocks were down anywhere between 30 to 60% last year, the fund was again only down around 15, 16%. So we believe this is really the proof again is in the pudding. We've seen how the fund has performed during periods where, the macroeconomic picture has not been so good for tech stocks, such as last year when the Fed kept hiking interest rates. And we think that this is a testament to the fund manager's ability to adjust to the changes in fundamentals of not just the various companies and sectors, but also the ability to adjust when it comes to, let's say, the macroeconomic picture. And as for what ATRAM does to manage risk for investors, we have a team of analysts who actively maintain constant communication lines with Fidelity, such as now, and in order to ask, if there are any pressing questions or concerns about, let's say, the fund itself or the sector in general. And aside from this, of course, we also have constant risk committee meetings, product committees, investment committees that when we really tackle all of the investments that we offer to the general public. So I think you can be rest assured that risk is something that we take very seriously. I believe Fidelity in the fund does the same. So you can be rest assured we're always on top of the markets.
Thanks, Miggy. I think both you and ATRAM and our ethos, along with Fidelity as well and Shuangwei, is really emphasizing the actively managed approach, right? Shuangwei, this next question is for you. AI and emerging technologies have been on the rise. How do you envision their impact on the global economy in terms of job creation and economic growth?
And thanks a lot for that question as well. Whether it's regarding job creation or conversely job destruction, I think that still remains to be seen. And that's because a lot about AI still remains an area whereby there's a lot more to unfold in terms of development. I think when we look at the hype around AI today, we might get that perception that we are already there in terms of AI, and the technology is here and it's fully fledged out and developed. But actually, that's not quite the case yet. Here at Fidelity, a couple of months ago, we actually held an AI day where we invited experts and companies that actually provide key AI building blocks and businesses that use and adopt technology to share their outlook. And through that, we were able to develop a balanced view on how we think AI will unfold in the long term. So broadly speaking, there are areas where AI can be adopted and deployed fairly quickly, but there are also other areas where adoption is a lot more challenging with more work that is required. So from a consumer perspective, if we take a look at generative AI, that can be adopted quite quickly because AI can work well for very consumer-related tasks, such as if you need to do content creation, if you need to summarize documents using a lot of data, AI can probably work pretty well because they don't require a very high degree of accuracy for such tasks. But when it comes to more of your enterprise applications, where your risk tolerance is low and you have to face with issues like data security, data governance, compliance, much more work must be done before AI can be adopted. Even the use of AI, if you're talking about AI in surgery, where there's also the risk, right, of health and human, that definitely demands a lot more accuracy than the first example I shared around summarizing your documents. And computing costs will also need to come down quite significantly for that to actually be done on the enterprise level. So we definitely do see AI infrastructure being built for new applications. But we have to also be able to tell that some of these are already real and running. Some are actually more still on a trial basis. Consumer applications should enjoy earlier adoption, but enterprise functions, given what I mentioned, your data security governance issues that's associated with AI applications and the general lower risk tolerance for these areas, it probably will still take quite some time for that to pan out. So where we see the impact, I think we are already starting to see some of it. But I think what was more important that I wanted to share is the perspective on how much more there is actually ahead of us.
Thanks for that, Shuangwei. A very realistic and grounded point of view. All right. Miggy, another question for you. Regarding our product suite, does ATRAM have an AI fund?
So I think this is really our AI fund, that while it does not solely invest in, let's say, companies working towards or that belong to the AI bucket, this company again also invests in other secular trends, as we mentioned, such as e-commerce, cloud computing, which we honestly think is the more prudent and better bet, since let's say if one secular trend doesn't pan out as much as we think, you have all these other very strong secular trends that can help buoy the overall earnings growth of the fund. And I think to that point, the fund does have significant AI exposure already. I think one of the companies that were shown when we were talking about the top holdings of the fund was TSMC, this Taiwanese company that manufactures the most advanced computer chips or smart chips in the world. We can see this in our smartphones. They also manufacture the chips needed for that companies like let's say OpenAI or NVIDIA use in order to actually develop products that belong to, let's say, generative AI. And through that, through, let's say, having exposure to TSMC and other companies like it, while it's not directly focused, let's say, uh, to a company that's developing something with regards to AI, the technology that it's enabling leads to that. So you do have AI exposure when it comes to this fund. And we think that a diversified tech fund when it comes to secular trends is one that really works best over the long run. Diversification is, one thing that we really place a lot of importance on. And we think like this fund, again, given the performance it has shown, does it best.
Thanks for that, Miggy. Thanks for the recommendation for that product and diverting towards a more diversified fund for that question. And Shuangwei, another question for you, and I guess one of the million-dollar questions I'm sure you get asked a lot as well. Tech has rallied these past years. Till when will this continue?
I think that also really depends on what horizon you're looking at, right? Like if you're asking, would it continue for the next 1 month, next 1 year? Based on what we have seen for the tech sector, generally across the year, like I mentioned, tech sector compared to your global equity market, it has outperformed for most periods, except 1 year, if we were to start looking at since 2006 onwards. So that's a very long runway of a strong performance for the tech sector. But having said that, that is the overall picture that we're looking at, right? When we're looking at the rally. Definitely one thing that we have to contend with when it comes to investing in technology is the volatility that comes with it as well. You have some of your mega cap names that, as the name suggests, mega cap do have a very significant weighting in the index, and their movement or the fact that they are very well owned by many investors, whether it's retail investors or institutional investors, as well as like passive funds or indices, that means they can have more volatile movements as well. That's why for us, when we take a look at tech investing, it's very important that we don't just chase some of these mega caps. To Miggy's point, that's also why in a down market, you don't only want to make money when market's doing very well. You ideally also hope to lose less when markets are not doing so well. That's why when we take a look at chasing the rally, that's typically not what our approach would be. Thank you.
All right, thank you. Thank you, Shuangwei. Miggy, we have another question from the audience. We're down to our last few questions. And this one, what is the best investment for an OFW, overseas Filipino worker, with little time to monitor the market?
So I think, thanks, Dan. Thank you for, whoever asked this question. I think it's a very important question that a lot of, I guess, our OFWs really face, no? The answer is also very complicated, since you have to look at first, what are your goals when it comes to investing? Are you saving up for a house? Are you saving up for the education of your children? Are you trying to send them to, let's say, the best college or is it just for retirement? And usually the longer, the estimated time period till you achieve that goal, your estimate, the longer it is, usually you can invest a higher portion of your savings into I guess, more volatile or higher risk, but also higher reward investments. But let's say if you're only saving for something you'll need in the next few years, let's say your kids are about to go into college, then maybe you want to look at that is less so volatile, but maybe something more along the lines of even, let's say, a money market fund or a treasury bill. But another way to answer your question from another angle is, you don't have a lot of time to manage your investments. So what should you do? Where should you invest? You should be able to, or you should invest in funds like this fund we're talking about now. And just to refer to what Charlie was saying earlier, this fund has a team of around 400 research professionals. So you don't have to worry, because 400 people who have, who are CFA charter holders, who have years, like thousands of years of experience maybe in investing are constantly monitored, that is managed by companies and individuals with very good reputations, and have the ability to continuously monitor um, your market, your investments, and of course has a good track record when it comes to um, how they've performed in the past.
Thanks, Miggy. And hopefully we were able to answer that question and give a bit more guidance on the actively managed approach and the experience that both ATRAM and Fidelity have here today for our audience. Last few questions for Shuangwei. What indicators should we look out for that would greatly affect the tech sector?
So for the tech sector, where we might see some threats would be in areas such as interest rate risk. I think Miggy has already spoken about that in his sharing. Other threats, macroeconomic volatility. If we start seeing recession in major markets, all of this could impact end consumer demand and also hurt some of the shorter term demand. And these all also point to what we call a more risk-off environment, where people don't feel comfortable to be taking risk, and generally they would view tech as a sector which is a bit more risky. So this sector tends to be hit in such situation. If inflation continues to be persistent or move even higher, that could also be a tougher environment for these particular sector, even though we would say these indicators that I spoke about will also similarly impact quite a variety of equity strategies.
Thanks, Shuangwei, for that. And now we're down to our last question. This one's for Miggy. Hi, Miggy. How has the Global Technology Feeder Fund performed over the years? If I have invested at the start of the year a few years back, how much will I have gained?
Yeah, so I think we can, try to refer to the slide that I showed earlier. If you look back over the past 5 years, no, you would have had a cumulative return of around 110%. So you've pretty much doubled your money in the past 5 years. Translates to an annualized return of 16%, which is quite remarkable when it comes to the usual performances of, let's say, various funds. If you look at where it is year to date, even with a rise now, if you look, usually when bond yields rise, you see that bodes very negatively for tech. But even with a very significant rise in bond yields that we've been seeing, the fund has returned year to date maybe around the mid 20%. So I believe around 22-23% year to date. So very, very strong performance. And again, we think it speaks to the ability of the fund manager and the team, that they're able to give a performance like this in with a macroeconomic backdrop that has historically not been so good for technology stocks.
All right. Miggy, Shuangwei, once again, we want to express our heartfelt thanks for sharing your valuable insights in this webinar and this Q&A. Our sincere gratitude goes out to you also, our dear audience, for your active involvement and the time you've dedicated to being with us today. We hope we were able to address your questions, and feel free to send us an email and also leave any comments or feedback. And for those who actually sent in questions, don't forget those counted as a raffle entry, and we'll be announcing the winners at the end. But before that, and before we close, we wanted to show a quick video before we end this webinar. And we wanted to talk about how exactly can you get in on the action regarding the fund. We'll talk about quickly ATRAM Prime, which offers access to a diverse array of investment options. These options empower you to tailor your portfolio according to your specific goals and risk tolerance. That addresses actually one of the questions by our audience on how do they monitor their investments depending on their risk tolerance, as Miggy also mentioned. Committed to long-term growth, ATRAM Prime's expert fund managers utilize proven investment strategies guiding you towards the creation of enduring wealth. And for more information, please refer to the video displayed on your screen.
Good day. ATRAM is the leading independent asset and wealth management company in the Philippines. If you are interested in investing in ATRAM Prime, download the app in the Apple App Store or in Google Play Store. You can also visit prime.atram.com.ph to know about ATRAM Prime. If you have other questions, you may fill out the contact form on our website or send an email. We hope this helps. Thank you.
And there you have it. All right, to wrap up, here are the winners of our ATRAM merchandise. Thank you for sending in your questions. And we'd want to reiterate, whether you're a beginner to the world of finance, you join us today, or you're a seasoned investor who wants to stay up to date, our ATRAM Studio YouTube channel is here with a collection of videos that features everything you need to know about finance, investments, and even ATRAM itself. So make sure to subscribe to our official YouTube channel for recordings such as this webinar, past webinars, and all the things you need to know about finance and investing. And you can access our official social media pages as well by scanning the QR code found on your screens. Before we let you go, we'd kindly ask you to complete this feedback survey by scanning the QR code flash on your screen. Your feedback today will be extremely useful for us in our future webinars. And to wrap up, once again, we extend our deepest gratitude for your participation today, this afternoon, and we want to wish you and your loved ones continued health and safety. I'm your host, Stanley Magno, and good afternoon. We hope to see you in the next webinar. Have a great day ahead.